Who's got money in the bank? As kids, we constantly heard adults telling us to save up, open a bank account, and watch our pennies grow. But now that we're older, we have to wonder, is stashing our cash in a bank really the smartest move? Imagine this, you're cruising through life, enjoying your morning coffee, and scrolling through cat videos, when suddenly, a neon sign flashes in your mind. Welcome to Great Depression 2.0. Don't panic. Grab your popcorn because this is where it gets interesting. Enter our financial superheroes. Robert Kiyosaki sits with Jim Rickards, ready to guide us through the wild and wacky world of today's economy. Robert Kiyosaki and Jim Rickards are like the dynamic duo of financial wisdom, each with a flair for uncovering economic truths. Kiyosaki, the author of the iconic Rich Dad Poor Dad, has been teaching people how to break free from financial woes with savvy investing tips and entrepreneurial spirit. Jim Rickards, on the other hand, is a financial lawyer and economist who is known for his razor-sharp analysis and predictions about global markets. Together, they're the Batman and Robin of the economic world, ready to guide us through the financial ups and downs with a mix of no-nonsense advice and visionary foresight. As these gentlemen warn us about the incoming economic crisis, in today's video, we are going to find out the asset that would help us get through. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. Now, forget everything you think you know about recessions and depressions. While most of us have been blissfully unaware, Kiyosaki and Rickards have been brewing up a storm of insights that'll make you sit up and take notice. We're talking about more than just gloomy forecasts. It's a saga of sluggish growth, soaring debt, and the ultimate golden opportunity. Literally. Yes. You heard that right. Among the chaos, there's a sparkling nugget of hope. Gold. And not just any gold, but the kind that could transform your financial future. Intrigued? You should be. Whether you're a financial newbie or a seasoned investor, this roller coaster of revelations is packed with aha moments that'll leave you feeling smarter and more prepared for whatever comes next. So, grab your favorite beverage, get comfy, and join us on this adventure. Kiyosaki and Rickards are about to take us on a journey through the twists and turns of the modern economy, with a whole lot of practical advice. Ready to turn your financial worries into winning strategies? Let's dive in! Kiyosaki and Rickards break down the difference between a recession and a depression with a dose of clarity. Think of a recession as the economy catching a cold. 2 quarters of declining GDP, a bit of a sniffle. But a depression? That's like the economy going into a full-blown flu. Growth is consistently below its potential, leading to a prolonged slump. For instance, if the economy should be growing at 3.5% but only manages a feeble 1.75%, that's depressed growth. It doesn't stop there. Imagine the economy is on a treadmill, but while it's barely jogging at 1.2% annually, its debt is sprinting ahead at 5 to 8% a year. This lopsided race means the debt-to-GDP ratio balloons, setting the stage for economic instability and potentially insolvency. So while recessions are short-term hiccups, depressions are chronic conditions, dragging down growth and piling up debt like a bad sitcom plot twist. Let's dive into some eye-opening historical comparisons to illustrate their points about economic depression. Remember the 1929 stock market crash? It took a whopping 25 years for the market to recover to its pre-crash levels. During this tumultuous period, savvy investors like Joseph P. Kennedy made fortunes by shorting stocks, proving that you can profit even in the darkest economic times. Think of it like this. We're living in a modern version of history's greatest hits. The 2020 pandemic brought its own wave of challenges, from social unrest to economic struggles that feel like déjà vu from the Great Depression days. But instead of watching black and white newsreels, we're now glued to our social media feeds, scrolling through all the economic doom and gloom. The big takeaway? By recognizing these patterns, we can better steer through today's financial storms, just like Kennedy did back in the day. Banks may seem like a safe place to store your money, but in reality, they can seize your funds during times of economic instability. When financial crises occur, banks aren't as secure as we might think. Experts like Jim Rickards even suggest that alternative assets like gold might be safer options. Inflation can erode the value of your savings, while deflation can put banks at greater risk, making your money less secure. In extreme cases, governments may implement bail-ins, where banks use depositor funds to stabilize themselves, leading to potential losses for you. Negative interest rates could also mean that you end up paying to keep your money in a bank. Considering these risks, it is worth questioning whether traditional banking is the best place for your money. Now, speaking of gold, what are your thoughts on gold investments? Do you see them as just fancy bling? Or do you recognize their true value as a solid investment? Share your thoughts and experiences in the comments below. We would love to hear from you. Jim Rickards champions gold as the ultimate shield against economic chaos. And he's got some shiny historical evidence to back him up. Picture this. From 1971 to 1980, gold prices skyrocketed over 2,000%, transforming pocket change into serious wealth. Fast forward to 1999 to 2011, and gold had another dazzling run, increasing nearly 700%. Now, we're in the midst of a new golden age that began in December 2015. Imagine this. The combined average gains from the first two major gold bull markets are an astounding 1,400%, leading experts to boldly predict that gold could reach $15,000 per ounce by 2025. Picture the sense of security and prosperity that comes with knowing your investment is not just growing, but flourishing, even when the economy wavers. In these uncertain times, gold isn't just a shiny metal, it's a beacon of hope and stability. If you're searching for a solid bet to safeguard your future, gold might just be your golden ticket to financial peace of mind. Rickards dives into the glittering world of monetary analysis with a fascinating proposition. If our faith in fiat currencies crumbles, we might just see a return to the gold standard. By comparing the global money supply to official gold reserves, he suggests that backing 40% of the money supply with gold would push prices to a whopping $14,000 per ounce. But here's the kicker. As gold prices climb, each percentage increase becomes easier, leading to rapid acceleration in the latter stages of a bull market. So buckle up. If Rickards is right, the gold rush is far from over, and the next golden era could shine brighter than ever. When it comes to investing in gold, timing is everything. Dive into gold before it hits its peak to capture the best gains. History shows that the real magic happens near the end of bull markets, so getting in early can mean riding a profitable wave. And if you're looking to turn up the heat on your returns, consider gold mining stocks. Warren Buffett himself is putting his money where his mouth is with Barrick Gold, highlighting the potential for mining stocks to deliver returns that could outshine physical gold. Now, more than ever is the time to act. Don't let your money just sit in the bank, gathering dust. It's time to take action and make it work for you. Imagine the peace of mind knowing you've made smart investments that are poised to yield impressive returns. The financial landscape is shifting, and the opportunities are right in front of you. In today's uncertain economic climate, gold remains a reliable safeguard against currency devaluation. Don't miss out on the golden opportunities in both physical gold and mining stocks. Invest early to maximize your gains, and leverage mining stocks for potentially higher returns. Stay ahead of the game and prepare for the financial changes on the horizon. Your future self will thank you. And as always, thank you so much for watching. Don't forget to like, share, and subscribe. See you in the next one.